On behalf of Quorum Business Advisors, welcome to this lesson, Buyer Documentation. This lesson is part of an educational series from us to you, covering the commercial and financial aspects when buying a business. In this lesson, we'll be discussing non-disclosure agreements and personal financial statements. NDAs, or non-disclosure agreements, and personal financial statements are documents you will need when acquiring a business. But these documents can be quite complex. This lesson will help you understand why it's important and how to use it. Let's get started. First, we're sure you'd like to know who we are. Quorum Business Advisors comprises professional, board-certified, and accredited intermediaries. Owner Anthony Rigney is the former president, North Florida chapter of Business Brokers of Florida. The business offers professional business brokerage services, including buyer searches, business sales, valuations, and exit planning. Now that you know a little about us, let's get to know the buying process a bit better. Business is tough, competitive today more than ever. That's why sellers will never disclose any confidential information, including the business name, address, business history, or even its financial details, without first getting to know you. This is to ensure the seller is fully protected against parties who have dubious intentions. To this end, the seller will always insist on verifying the seriousness of the buyer. This verification will include a summary of your business expertise, financial liquidity, and so forth. But before information can be exchanged between the seller and the buyer, it needs to be governed by strict confidentiality. Maintaining the highest level of confidentiality pre, during, and post the sale or acquisition of a business is paramount. Informing customers, suppliers, employees, or competitors of the sale is strictly prohibited and could jeopardize the successful transfer of the business to you. If customers knew the business was for sale, they might suddenly start finding fault with the business's service or product, or become anxious for fear of change. Employees might immediately start job hunting due to their job security being under threat. This could result in the business being continuously short-staffed during its sale period. Suppliers are always worried about offering payment terms to any business. If they found out that one of their clients' businesses were up for sale, it could result in damaging financial repercussions, with cash-on-delivery terms being implemented. This could severely impede the seller's business cash flow. Competitors could shrewdly leverage this information to poach existing customers and key employees. This is why it's essential and just makes good business sense for buyers to sign a non-disclosure agreement, or NDA for short. All business intermediaries are equipped with this knowledge and provide you with this NDA for signature. Aside from confidentiality between the buyers and sellers, what else does the NDA do? The NDA identifies the business intermediary who is coordinating the business transaction, sets out your responsibilities as the buyer, recommends seeing professional advice, including CPAs and attorneys for the obtaining of specific advice relating to the transaction, assists in ascertaining that the buyer isn't a competitor acting in bad faith to obtain confidential information about the sale, explains terms of the confidentiality. If you're happy with all the information contained in the NDA, you'll need to sign it and return it to the business intermediary. Upon receipt hereof, the business intermediary will provide you with an executive summary. The executive summary is a nifty document that provides a broad overview of the business you're interested in acquiring. It will include business price, deposit payment, revenue, asking price, reason for sale, operating years, employee composition, transition period, 3-year financial overview, special operating licenses, lease terms if applicable, Not included in the sale, however, will be the legal entity. A word of caution: after signing an NDA, the seller isn't obligated to disclose highly confidential and in-depth information about the business to you. Sellers appoint business intermediaries to get to know buyers, just like you, prior to introducing them to the business in order to ascertain whether it's the right match. They are tasked with determining your financial status and appropriate business experience. In the interest of time saving, sellers don't want to waste theirs introducing their business to buyers who are not only unqualified or don't have the financial liquidity, but also those who aren't really serious about acquiring a business. For the buyer, having business experience and/or having a solid resume reflecting appropriate skills for the business they wish to acquire is very important. Just think about it. Wouldn't you rather spend your time and effort assessing businesses that you have the necessary skills or experience to operate? When vetting you, a business intermediary will request financial information from you. This is to ascertain your liquidity. The more common verification channel is via a fiduciary letter, a CPA, a banker, a financial planner. These professionals will draft a document or letter stating that they've reviewed the deal transaction and that you are financially stable to acquire the business. Another channel a business intermediary can use is your personal financial statements, or PFS for short. These statements will indicate all your liquid and non-liquid assets, liabilities, and net worth. You can be asked for bank statements, but these documents are rarely asked for. Business intermediaries will ask for the signature of the NDA and to verify your financial status rather early on. This is to separate the serious buyers from those who are just looking. The business intermediary will also ask you to submit a summary of your business experience and appropriate qualifications or skills. In some cases, special licensing is also required, and it may be requested at this stage too. Specialist businesses sometimes do require a vast amount of experience. In this scenario, the business intermediary will either set up a meeting with you to discuss it, or you can even submit your resume reflecting this. Once the NDA has been signed, your financial status has been confirmed, and you've demonstrated that your skills align with the operational requirements of the business, the next step will kick in. This is when the business intermediary will readily share additional information relating to the business you want to acquire. The acquisition of larger businesses would generally include comprehensive financial statements, the name of the business, and its address, plus a confidential memorandum. In conclusion, the seller has a business to sell, one that you are interested in acquiring. For this to happen, both parties need to exchange information and maintain confidentiality to ensure the successful sale of the business. We hope you enjoyed this lesson. On behalf of Quorum Business Advisors, we'd like to thank you for listening. Tune in next time. If you have any questions about buying a business, please do not hesitate to get in touch.